Good morning, everybody. Good morning. Good morning. Good morning. We get started in a couple minutes here. Hope everybody's doing well. Good morning, Jim. Make sure my audio sounds good. Good morning. Good morning. Good morning. Get going in just a minute here. Let everybody file in. Hopefully it's warm and sunny where everybody's at. Good question, Funnel Club. Absolutely. So the key takeaway is we have two scripts that run in TradingView. One is for 0 DTE and one is for the full expiry or quartile expiry. So depending on what your trading time frame is, if you're a 0 DTE trader, you'd be using the 0 DTE script if you're an intraday trader, or if you're more of a swing trader, you can use the full expiry or quartile expiry. Basically what I like to do is I'm more of a swing trader. I'm not really a 0 DT trader. I will do 0 DT when I think there's a good risk reward or great opportunity. But what I like to do is what I did here is I actually have the full expiry script, but then I put the 0 DT transition zones. Transition zones are basically the center point of our whole trading plan that we look at. Obviously, if we're above, we're a little bit more positive, call dominated, looking for a move up. If we're below, we're usually in a little bit more weakened structure where we're a little bit more cautionary, or if you're looking to short for a move to the downside. So what I do is I overlay both. I put 0 DT transition. I do GEX and DEX, the blue and gray box here. And then I have the full expiry is my background script. So you could flip those if you want. But what I like to look at is when there's a greater confluence of both of those levels, then it gives me a greater confidence of my trading. So obviously you see that the full expiry script is 69.75, 0 DT script is 55 to 60. But pre-market, we were testing the 75 level, right, close to it. So that's why I like to look at. And now we're pulling right back down into 0 DT transition area. And that'd be in the 55-60 area. So I'd have a box right here. My anticipation would be we pull back into the 0 DT transition area, most likely stabilize, stay above it. If we lose that transition area, then I'd be looking for a move back down towards the downside, 69.50, and then to the 69.45 level. So hopefully that answers your question, but excellent question. And we get that all the time. I know it is a little confusing, obviously, when people are posting multiple charts and scripts, but I like to overlay both. So it just gives me a greater confluence of the overall structure of what's happening. So yeah, so. So basically what I would say is how we approach this is depending on when you start your trading day. We have a script that runs at 8:44 that I would update. Good morning. And I'll update that here in a few minutes. And basically I won't change the script for the rest of the day. Now we do have people that update the midday, usually the 12 o'clock or 1 o'clock run if you want to get the updated levels, but the structure pretty much stays in place. And then the price action navigates around that structure. You rarely see the structure change significantly unless we're having a large outside 2-3 standard deviation move for the day. But as what we're going to see today within the structure, most likely we're going to be contained again between 6,900 and 7,000, center point transition and 6,950. So structure is probably not going to change that much. So, all right. Thanks, everybody. Good question, though. I appreciate the interaction. All right, let's go ahead and jump right into it. I know we're answering that question there. So this is Michael coming to you from Game Edge, pre-market prep session on Thursday, February 12th. We're going to cover this 3 pillars: sentiment, structure, and trend. And we'll go ahead and jump right into that, into our trend market trend model. I discussed yesterday that we're actually seeing a little bit of weakness. This is based on the tick index. Bolded white line is your intraday instantaneous cumulative tick. So if you're an intraday trader, you'd be wanting to watch the bolded white line. And if you're a swing trader, 1 to 3 days or longer, you'd be want to watch our railroad tracks, or what we would term moving averages, but these are our railroad tracks. As you can see, this is a consolidation pullback now, slightly weakened state when the bolded white line is under these railroad tracks or momentum moving averages, and when they're in a negative slope to the downside. But basically, we're in a consolidation pattern. It's what we saw yesterday. And I zoomed out on a 15-minute time frame for SPX, and really for the past week, we've been in the 6,900 to 7,000 range, just chopping back and forth. And then the market trend model is basically indicating the same. So what should you be doing as a trader? Basically, you should be waiting until we get some sort of directional move within the overall market trend model. So this would be like the previous move we had. We can look at the trading view chart, but moving significantly above those short-term moving averages, or the momentum moving averages, in a positive slope, basically a linear up day, and then you get in motion for your 1 to 3 day time frame or your intraday trading. As of now, we're just in a consolidation mode. This could go either direction. We could see this move back down towards the colored ribbon, which would indicate some weakness and a pullback, or we could see this start moving back to the upside and trying to overtake the 7,000 level. On a longer term time frame, our mechanical portfolios are on P-trans to PX because we're above the colored ribbon. Colored ribbon is expanding to the upside. So again, that is bullish on a longer term time frame for putting capital to work. So we continue to do that on our mechanical portfolios. All right, let's move on to the trading view chart. Again, this is a 1 minute chart, intraday, instantaneous. So you can see week heading in to the previous day, into the close. And then yesterday, we started regaining those momentum moving averages early on in the day, a little bit of weakness midday there around 1 o'clock. And then we started moving back to the upside again. So this tells you to get in motion here if you're an intraday trader. Once we start, these colored ribbons start flipping to the upside, and then you start retaking the momentum moving averages. Now, these momentum moving averages are still not stacked in the proper order and a positive linear slope to the upside. So what you'd want to see is the white move above the yellow, the blue start flipping above the yellow, and all three of these stacked, as you saw over here, in the proper order: white, blue, and orange. Sorry, yellow. But again, we're not seeing that. These are flattened and just moving sideways. So again, you should expect the same thing within the SPX. Choppy price action between key levels until we get an overall decisive directional move via the market trend model, as well as price moving above 7,000 or really below 6,900. So most likely we'll be contained within those areas. All right, let's move on. The SPX options complex, largest, most notional value. SPXA heading into the February monthly OPEX, call dominated above and below spot price. Everything still looks good. 7,000 looming large overhead. Probably going to be difficult to get over again today. So that would be that key stalling hurdle to the upside. And then transition area here. Again, if you're within transition, most likely be choppy price action. But again, the SPXA, this is our 40,000 foot view. These are our cruise ships or our tankers that are steering the overall market into the monthly OPEX, which again, being contained between 6,900 and center point 6,945, 6,950, and then to the upside 7,000. So again, we most likely just anticipate more back and forth action between those two levels until we get past the monthly OPEX. All right, moving on the SPXP upper quartile. Again, you'll notice the 12th, 13th, obviously today and tomorrow, larger expiries, and then heading into Monday. And then next week, obviously, is the monthly OPEX Call dominated above and below spot price, so supportive on any pullback still. You see 6,900 below us, 7,000 above us is PGEX, again, the most likely, and it's COI. That's the highest call speculation area, sensitivity area. But we actually have call speculation continuing to the upside. So we'd like to see the structure continue to advance. So you'd like to see the 7,000 level PGEX and COI advance up towards 70.50. Again, that would mean that out of the money speculators are opening more contracts. Most likely we'd have price appreciation. So again, as I said, transition area here on the upper quartile is a little bit wider. So that's 55 to 75. Again, choppy within that overall range, and that's what you're seeing pre-market. All right, let's move on the SPXP GEX ratio. I spoke about this yesterday that I wanted to see the GEX ratio in a positive slope. This is like a put call ratio, but it's weighted for a short dated call gamma versus short dated put gamma, because that is the time component we add to it. So again, we're seeing a positive slope, even though we had a pullback in the SPX. So again, that's out of the money speculation, call speculation coming in above spot price. So that's what you want to see if you're a bull. And above the one line, that's the theoretical balance point between calls and puts. So we give an age to the bulls. But you can see just choppy price action really across the board all along this, even though we had a pullback down here. This is towards 6,800. Again, we hit that 0.5 GEX ratio we talked about. That historically, that's where we see a bounce. I talked about that on a pre-market prep heading into those multiple days. We saw the bounce, and now we're just chopping sideways within the overall structure. All right, Delta balance. This was a cautionary for me looking today. Obviously, choppy price action here. As we talked about, this is the overall structure of left-hand plane, which is below spot price. That's the red dotted line. It's in a positive slope. Green dotted line is your right-hand plane above spot price. Again, in a negative slope. So again, out of the money speculation starting to wane a little bit. Delta balance pegged at 1. But this was the only concerning thing I was looking at heading into Friday and into next week, into the monthly expiry. We're actually seeing the left-hand plane drop pretty significantly, dragging the delta balance down, actually close to the zero line. So again, this is the out of the money put hedging, or sorry, in the money calls, leaving the overall complex, out of the money puts coming in for speculation for weakness. The right-hand plane, though, actually is being maintained above zero. So that's your out of the money call speculation. So that's helping to stabilize and support the delta balance from dropping completely below zero. But if we start to lose this out of the money speculation, this is going to drop towards the zero line, and the delta balance will drop below zero, and then we'll give an edge to the bears for weakness heading into the monthly OPEX. So we'll keep an eye on this into next week, but the projected expiries on out in time are projecting some weakness into next week. Obviously, this is into the 19th. That would be next Thursday before the Thursday before the monthly OPEX. So anticipating possibly some weakness into midweek next week, 17th. That'd be into the overall Wednesday. So we'll watch that intently. All right, moving on the SPXP 0DT. Again, we are call dominated, so supportive type action, but we see in the money puts right around that transition area. You see that here. And then we see supportive down towards 6,900, most likely stabilizing as we saw yesterday into 6,920, 25. To the upside, 7,000 looming large. That'll be your charm headwind, as we'll discuss on the net stack command. But again, I expect and anticipate choppy price action right around this central transition area, as well as 6,945 to 6,950. Now, if we do start moving above 7,000, we have the opportunity to appreciate up towards that 70, 20, 25 level fairly rapidly. So again, that's what I'll be watching. And then below 6,900, supportive action down towards 6,850. Again, not really anticipating this. And we see, unless we see a large change in sentiment and structure, and we see the market trend model change pretty quickly. All right, so SPXP net stack command, high sensitivity levels for a day, where I talked about that. In the money calls, 6,900. You also notice that the left-hand plane, right-hand plane integral, our OI is a little bit lower today. Charm overhead, again, 7,000. That's going to be a key area. That's the headwind. And then out of the money puts below us, those will be supportive. And then gamma, that's where the basically speed comes in, 6,900, 7,000. So again, trapped within that overall range. And then net Vanta is almost 2x, 1.3 to the upside. So again, if we see volatility drop, out of the money calls come in, and we take the 7,000 level, most likely we'll have a Vanta tailwind to drive us higher. And then you see where those transition areas are. Obviously 6,895, we're under that area, and then 6,900 to the downside. Again, you see those transition areas there. Transition areas are very tight also. You'll notice that within the overall structure. But the larger area and structure is 6,900, 7,000, and most likely stuck between those areas unless we see market participants really want to drive outside of those. But I'm not anticipating that heading into monthly OPEX into next week. I anticipate us to really be stuck within that overall range. And pretty much it's Groundhog Day, what we saw yesterday, kind of the same transition areas, the same drunken sailor range, and really the same overall market structure heading into today and heading into Friday. So, all right, GameEdge.us, check us out, newsletter. We'll check out those individual equities really quickly. Newsletter, put in your email, you'll be delivered beyond the bell. This is basically goes over our thesis and tools. And then check out our free courses. If you're joining us this morning and haven't joined us before, GameEdge FastPass, this is all free. Sign up and you'll be delivered to your inbox. And then pricing, Discord, 14-day free trial, all the tools turned on. You can come check us out and we'd be happy to get you up to speed with individual equities, wheel strategy, P-trans to PGX, mechanical trading strategies, as well as intraday navigation of the SPX complex. So, all right, let's go ahead and look at the Qs heading into today. Qs were actually trying to move. Let's go ahead and look at this one. Qs were actually trying to move key areas today, 616, 615. Keep those on your chart for once you head into today. Transition areas as well as zero gex. And then to the downside, 610, 611 is where I was watching on that. And SPX, let's see where we're at. So right back down to the transition area on 0 DTE, and we were trying to test 69.75 and could not move above it. So again, as I said, Groundhog Day, pretty much heading into today. Let's look at 0 DTE on Qs. So call dominated for today, net OI 234,000. So again, structure looks very good heading into today for the Qs. Pull back down towards 610 should be supportive. You see actually some puts sitting there significant amount of puts there that are out of the money if you're above those. So again, that's going to be key level, but charm supportive with these in the money calls below us. And then to the upside, 620 is where I'd see some stalling on the Qs heading into the day. Let's look at STX. I think STX has been doing pretty well, right? Price appreciation. So let's look at the upper quartile. So STX only has Friday expiries. So we'll look at this Friday. Let's go ahead and look at this Friday, and then we'll look at the quartile. So call dominated, above and below spot price, transition area fairly wide. You're at the top of transition. If we start taking the 422, look 425. Again, that's PGEX, high sensitivity level, and then you actually have some in the money puts overhead, and as well as some out of the money call speculation. But you'll notice the OI here is very low once you start moving up. Only 15,000 for this Friday expiry, so very low OI. So dealer hedging and metrics not really in overall control of this, but I'd look for 425 to the upside. Let's look at the upper quartile. So you see the structure really very low OI, so it's hard to get a handle on STX there for the overall hedging and dealer metrics. But 420, 425 is where I'd anticipate some stalling, which is right where we're at right now. So, all right, any other charts anybody wants to look at this morning? I'd be happy to check those out. And we can check anything else anybody else wants to check out this morning. If not, thanks for UNH. Yeah, UNH. I haven't looked at UNH lately. I know it was weak. So weak. Let's look at the quartile here. So put dominated, below transition, in the money puts overhead. I'd say supportive into the 260 range, as well as the 250 range. That'd be where I'd be looking for some stalling to the downside. But not significant out of the money speculation at all, and really in the money puts overhead dominating. So moving UNH moving up would be most likely difficult. So yeah, we can go through SPY real quick. For today, I'll look at SPY. So call dominated above and below spot price, supportive on any pullback down towards 689. We'll look at the chart here in just a second. 697 to the upside. Probably going to be a little bit difficult to get over because of the charm level, but supportive on any pullback really down towards 689. Let's look at our trading view chart here. So 690 zero gex in trans, 691 p trans. So I'd look for that to be supportive on any pullback there on SPY. And then to the upside, you really have 700. Basically, you're in the same range as SPX, 690 to 700. And then I'd be looking at pre-market high and prior day high for stalling within the overall structure. But Qs, SPY, IWM all look good. Again, you're going to experience intraday weakness and choppiness, though, from what is happening with the overall range. And then heading into monthly OPEX, really nobody's positioning for any outsized moves really above 7,000 or below 6,900. So it's the same thing with SPY, 7,690. That's really kind of where I anticipate us to be stuck really for the next probably week, and just choppiness price action, unless we have some exogenous news event that comes out and drives price significantly one direction. But I'm not really anticipating that. So then after monthly OPEX, you kind of you unhinge things. You're free to move about the cabin, as they say, as market participants try to reposition for the next OPEX. And that's where we could see some overall weakness positioning after the monthly OPEX. And where that money gets deployed after OPEX is really going to be kind of driving the bus into the March expiry. So, all right. Okay, thanks everybody for joining us. Appreciate it. As always, manage risk heading into today. And again, the game plan is really stuck around these key areas of transition and 69.75. If we take 69.75 to the upside, absolutely. Then I'd be looking for 7,000. We have an opportunity to move there, but it's going to be a difficult climb. It's going to be choppy. So just manage risk, size down. And directionality is probably just going to be, again, as I said, a choppy mess. So, all right. Thanks, everybody, for joining us. Make it a great day, and we'll see you tomorrow.